risk selling, too early. Like I've done these things so many times. They look extended, and then it just pull back a little bit, go sideways, and then they just keep going. That's the thing I had with NVAX last year, DQ lately. Like there's so many, like they're all up like 50-100% since. But on the other hand, it would suck to give back a huge amount of profits. But question is, which sucks more? Missing out on profits or giving back profits? You have to choose between two sucks. It's gonna suck either way. You just gotta choose which one is gonna suck more. You want to buy them near the moving averages. Like if you study, like I see these suggestions all the time. Like guys, seriously, like if you haven't spent, like I talk about this, if you haven't spent at least a few hundred hours studying breakouts on all the US stocks, you should probably even not put any suggestions in the chat, because the thing is, one thing you will find is the best breakouts, pretty much all the great breakouts, happen from when the price is at the 10 or the 20 moving average. Okay, not when it's way above. That's one of the first things you will notice. I'm always talking about surfing the moving averages, and you will see it for yourself, guys. It's not a mythological creature I'm talking about. You will see it yourself. Yeah, and sometimes I break my own rules. I bought space 2 days ago, but I shouldn't have done that. I knew better, but sometimes FOMO gets the best of me. But now the 10-day is starting to catch up, and look how clean of a move it is. At one leg higher, and now it's digesting with higher lows. And then you compare to something like IDEX. Like, okay, I see it has higher lows and everything, but it's hard to explain. Like, you need to do the work, and you will see it for yourself. You will learn how to identify a good setup. But the key rule rule of thumb is the 10-day and or the 20-day needs to catch up to the price. The stocks are unless in this type of market we're in right now, sometimes stocks don't even wait for the moving averages. Most of the time they will. Like even in this market, look at my home runs. Till rate, this thing more than doubled on me. Look at this thing. The 10-day caught up. The price even undercut the 10-day several times. Look at what is it? SI. It undercut the 20-day. Look at how tight the 10 and 20-day. The price caught up. I didn't buy it here, right? I bought it here when it developed the flag and also MSTR. Where did I buy it? I didn't buy it here. I didn't buy it here. Okay, I bought it here when it flagged, showed relative strength, and the moving averages had caught up to the price. Futu, yeah, tomorrow, this would be a 5, especially if it keeps going, it's going to be a 5-star for tomorrow. Whew. And it's so liquid. It's a $200 stock. Yesterday was like $150. Traded almost 20 million shares. And when I bought it initially here, it was kind of illiquid. It was like a pretty small position, and now it's one of the more liquid stocks on the US stock market. Pretty fascinating. And look at how the volume is increasing as the price is increasing, which means the dollar volume is going up exponentially. I'm gonna show you guys. Like most of the money usually comes in on every big market move ever. Most of the money comes in near the top. Now look at the dollar volume on this thing versus share volume. Look at this, how it's going up exponentially. Now all these people who are, I don't know who's buying it up here, funds or individuals or whatever. Why didn't they get excited about this thing, down here? Now people or funds are just buying because the share price is going up. That's called momentum. And if you can create the setup around momentum, you can buy anything you want. You will never have to worry about money again. And probably your kids won't have to ever worry about money again. Trading is such a pain in the ass. It's such a mind fuck most of the time. Like, most people can't handle it. That's why it's so important to have specific setups. And even then it's like constantly a mind fuck. Now imagine being, wasting your time watching like CNBC and stuff. It's like a double mind fuck. That's why I just, try to cut out all distractions and just focus on what's going on in front of me. Focus is so important in this business. Well, it's focus important in any business, obviously, but in this business, if you're not focused, it can be the difference of you living on a yacht or versus you living on the streets. That's the difference with trading compared to other professions. The hyper growth on the CMPH looks like it's over for now. This thing had triple digit, guys. Look at this thing. Triple digit EPS and earnings growth. This is what you should be looking for. These are the stocks that can make very big moves. If you just focus on one type of stocks, just focus on the stocks that have triple digit earnings and or revenue. Look at the growth in mid-high double digit revenue growth and over 1,000% in EPS growth. Here it was 900%. Look at the move it made. Look at the moves. You just look for setups on these types of stocks. You have a big edge. Or you can just focus on stocks with top momentum. Or you can do a combination. Depends on how you're wired, what you want to, if you want to. If you have a hard time just trading pure momentum, also want fundamentals on your side, that's a great way of doing it. Like, I've been in it for like 2 weeks, it didn't go. So if it tries to break out again, I'll rebuy it, but right now just, got rid of the margin. That's the number one thing. Or well, I am using margin actually because I also have a decent short exposure now. But I'm not margin net long anymore. When things are going well, you push it, and as soon as you start seeing signs of a slowdown, you gotta get rid of the margin. Otherwise, you're gonna get killed. You're gonna be a market statistic. That's how you do it. That's how you supercharge your returns. And also, guys, remember, you don't ever have to use margin or short to have triple-digit returns in a year. You can just open. Just trade on the long side, like short-term swing trading. And if you get really good at it, again, it's down to you. How good you want to get at it. How much time you're going to spend to study setups and apply those findings. It's up to you. It's up to you.